Good morning and welcome, everyone. We will start with the weekly planning and scanning here for the official recording. And we have, great, now just started to record, so good morning and welcome, everyone. As we enter the sell in May, go away, our weekly thoughts, as we wrote, is now available. You can download that in the Documents tab. For those, it's in the Document tab. It's documented at it's titled Weekly Thoughts 5/4, May 4th, and so, excuse me. I think we'll just cut into the chase here. You guys can take the time to read. I'm still looking for the market to, as I've been stating for several weeks, to hit at least that 5% year-to-date by the May options expiration. I kind of changed that a week ago to possibly by the end of May. There's about a 60-40 chance, 60% chance that we'll hit before the May options expiration. Then the spiders of 214. That's a 5% move year-to-date gain. So from the close of 2013, or excuse me, from the close of 2014 to the high, a 5% year-to-date gain would put the spiders at 214.87. If we do get to the quarterly pivot persons, which is what I didn't tag, but I said my longer-term resistance, is the quarterly, is 219. And that would give us a year-to-date gain, and that's the quarter which has the effects of April, May, June. So the end of June, quarterly pivot resistance 219, that gives us a 7% year-to-date gain. As of Friday's close, we have only boasted at 2.5%. Monday on the open, we were at 3.8%, so darn close to 5%. We'll see if we can tack on more gains and test that high this week. We did avoid a lot of the these are some of the trades that we talked about. One trade we've mentioned is Xilinx, Tiffany's. Those were several weeks ago. They were weekly high close dojis, which means you need several weeks for those. Those are longer term. I like to give the weekly high close doji. It gives us a chance to maybe look for little pullbacks and trade them over time. So I just wanted to follow up, and still those comments hold true. If two stocks, EQR and NSC, those two trades would have stopped you out because they took out the 4-week low or the low underneath the high close doji, or the rules of the high close doji were violated with those two names. I still like NSC. It did pop back. A thing that we can do, since we were focused on options last week, one that we do teach is that when we get high close dojis, you can be directional. And if you're directional, what type of strategies can you do? Well, first, you can look to sell for a few weeks out as the market posts its bottom and starts to prove itself. You can sell put spreads and take in a credit. That's a bullish neutral strategy. You could look for longer term duration. When I say longer term, I'm talking more than 90 days if it's a weekly high close doji. And there are strategies that we trade around those, many of which we will be discussing in our seminar in Las Vegas. And we're going to really pinpoint, this is a little bit different of a seminar that we're going to do this year in Las Vegas. We're going to say, okay, guys, here's how we use the software truly. You know, especially Genesis, especially Trade Navigator, and apply it to maybe more options and taking advantage of those strategies. Day trade strategies are not much different than entering and triggers for longer term trades. We're just going to apply how we use this for stock position trading and get down to the nitty-gritty and go into that with real-life examples. Something that we kind of do in our weekly mentoring sessions. However, it's a shorter time than the weekly mentoring sessions. So let's get into that's what we plan to do at this seminar in Las Vegas. So it is a roll your sleeves up. It's going to be an intense, take notes, get an ace bandage on your wrist. You may be getting some cramps from writing because there'll be some great information to write down, and past book play, kind of like open a page and say, okay, what are my selections, so that when you are bullish, you don't have to sit there and go through your memory of what was I taught years ago. Here's the passbook play kind of look, or the playbook of what to do, or strategies you can implement, okay? So anyway, we have stocks, as you see, for this week. We had 58 stocks that generated a sell signal. Healthcare contained 11 names, utilities 8 names, consumer discretionary 7 names. So those were the bulk of the stocks that generated in a I guess you want to say, what area had 20%, and that would be healthcare. Then next was utilities, and then next was consumer discretionary. That's the bad news. So I don't really think that a weekly sell signal in last week's situation, especially if we look down dirt and nitty gritty, a lot of these names were already in like trading ranges. And so I don't find that to be that disastrous, that an overall clue that the stock market's getting ready to plunge. But we are cautious. I had 24 names that generated a weekly bearish low close doji patterns. And some of those names were pretty, there's some pretty ugly patterns there, I will admit. I had 12 stocks though, half of the sell signals. I had 12 stocks, or excuse me, I had 1/5 of the amount of sell signals. I had 1/5 of buy signals, mostly in the information technology space. Which does that refer to you? That gives you a sense that technology, or the Qs, or XLK, or XCI is still kind of bullish, and that we could see continued trends moving up in that space. The stocks that I liked mostly were EMC and some of the big names. Hewlett-Packard, which is one I have already mentioned earlier before we began recording. In mentoring, we talked about a ratio back spread, a very bullish strategy where it's a delta play. You sell a 60 delta, for example, and you buy 2 30 deltas out of the money. You sell one, collect premium, you buy 2, and you have to, this is a time and a delta play. So you buy, you put in an expiration that has more than, or around more than 55 days of expiration. You're looking for an immediate move, and if you get an immediate move, you're well rewarded, and you're using the market's money, not your own, for a directional shot to the upside, and you're looking for the out of the money deltas to appreciate faster and more and double than the in the money delta, which is a 60, say, because a 50 delta is at the money, a 60 delta is slightly in the money, and you're looking for the out of the money deltas to move more than the in the money deltas. We used to do this strategy. I traded the ratio backs in the bond futures for a very long time, and it's a very it's not complex, but there are rules, and if you can follow rules, then it's a great strategy. The rules are that if this stock or the instrument does not move prior to, say, 32 days before the option expires, you got to get out by that 30 days. So that means 31 days to expiration, whether the trade made money or not, you must exit that trade because theta starts kicking in. This is a delta play only. It's directional. There are specific, again, specific rules. Anyway, we did that with, we talked about that Friday. NTAP, NVIDIA, Oracle are all stocks that I think have potential to move up. We'll talk about that during the course of the day. We also had 11 stocks, interesting, 11 stocks that generated, again, half of what the bearish counterpart of an HCD is an LCD, the low close, the high close. So we had 11 stocks that generated bullish high close doji. One was Bank America. We gave that trade out Thursday to you guys in this room. Another one was Exxon. And we did have 38 stocks generate daily bullish high close doji patterns. So that was kind of interesting because it's the financials that have not really moved in conjunction with this rally, and everyone's been freaking out about transportation. And then with biotech leading the way, which had a little bit of a sell-off last week, or it came off its highs again, it's kind of wreaked havoc on some of the index analysis, meaning the Dow, the NICE, the New York Stock Exchange Composite, the Russell, and we'll go through that in just a minute. But here are some technical points of interest. Every single stock index was still in a weekly buy mode, except for the Russell. The IWM generated a weekly sell signal. But We've discussed in this room that the Russell actually has a tendency for seasonally weak period of time in May, and therefore that may have been a factor behind why we saw the Russell generate a sell signal and get a little bit of downside last week. This is interesting. The weekly advanced decline level posted a small net gain in the spiders and the diamond. When I say small, I mean like 2-3 stocks. I think the diamonds on a week-to-week basis was up 2 ticks, and the spiders were up like 3. So they were positive at the end of the week. The Qs exactly fell by 2, a value of 2. So the weekly advanced decline in the Qs fell by 2. So I find that kind of neutral. I don't find an advanced decline in the S&P 500 rising by 3 very positive. I don't find the diamonds in the advanced decline rallying by 2 ticks very positive, but I don't call it negative. I call it neutral. We did see AD levels posted net losses in the Russell, NICE, and NASDAQ. The weekly McClellan oscillator, this I find very interesting. Remember, last week was at negative 95. Well, after last week, it became more positive or less negative. It was at negative 95, and as of Friday, it's negative 58. So we're starting to see this weekly start to move up. And we talked about the cycling effect of the McClellan oscillator from oversold to overbought, what that time period in the past has been. Interestingly enough, it's multiple weeks, as you recall. And with that said, it is starting, as the market moves up, it's starting to go from deep oversold to it's starting to move off the oversold levels. So the daily McClellan oscillator went back down. This is interesting because remember, day to day, it tracks day-to-day performance, and the week is Friday to Friday. The daily McClellan oscillator is negative 93. It was positive 32. So it is suggesting that as of Friday, the daily McClellan oscillator was actually oversold, not overbought. So there's room for this market to move up. Many of you, if Mark Wilhelm was here, he has been a long time follower of my work since I first wrote. And I think what attracted Mark was back in when I wrote an article for Futures Magazine. It was pivots and cycles, and looking at the count of a cycle. And one of the things, it was, I believe, December of 2002. So I think I wrote the article in like late September, early October to make the publishing deadline, which was around November 1st. So bottom line is it was the 11-week cycle. 11 weeks is got nothing to do with a Fibonacci reoccurring number, because if you add 1 and 1, you get 2, 2 and 1, you get 3, 3 and 2, you get 5, 5 and 3, you get 8, 8 and 5, you'll figure out you got 13, and there is no 11. If you keep adding those numbers in sequence, that's the Fibonacci number sequence. If you keep doing the numbers and going out in time, or keep adding them up, like for example 8 and 13, and keep going and going and going, you'll find that there is a number called, well, not called, but there is a number that it comes in line, it's 55. So what does 11 weeks have to do with the Fibonacci recurring numeration sequence? Well, if you take 11 weeks, really simple. If you think about it, while it might not be a reoccurring Fibonacci number, it is actually on a daily chart, because 11 weeks with 5 business days in a week is 55 trading days. And so our next 11-week cycle high is due on the week around 7/18, give or take a week. I find that interesting because we also talked about the McClellan oscillator on a weekly basis having to take a specific amount of time, and it also coincides with that analysis. Now, this is a coincidence. One has nothing to do with the other, but I do find that to be a revelation in the sense that it's eye-opening that markets do move in cycles, and I believe the world turns in cycles. Full moon cycles, high tide, low tide cycles. There's all kinds of economic cycles, boom-bust periods. I believe in cycles. I've been using them for decades, and so I just don't put all my faith in a cycle. I utilize other forms of technical analysis. So any event, I wanted to point that out to you. In addition, for this particular week, since the beginning of the month, I thought it would be nice to have a really nice kickoff to the month And for American Pharoah, what a race that was. And for Mayweather, what a win for that. That was a big surprise. So we're always full of surprises in this world. And I think one of the things that we can reduce our surprises is to pay attention to May seasonal sectors. Last month, we put up our April seasonal sectors, and we noticed that the bonds peak out like seasonally. They're weak. The TLT, which is the ETF on bond prices, and they went down. A lot of our seasonal strong periods kicked into high gear. We were hell-bent on XCI, which was the technology. We were saying that was a very bullish, and we focused in on that, and it paid off handsomely for us. So if you were here last month, if not, you can certainly go to the document tab and go back and review what we wrote. You can always go back, because I put it in Word document, and you always can go up to the file, get the Word document, and find out when did John put this, before the fact, after the fact, and so you can actually see, actually yesterday, this was the last time we posted this, so we didn't cheat and wake up at 3 in the morning and say this is what we think. This was all done well before yesterday's market open, and so I think that we sit down, we do our work, we do our homework, and we put out some, I think, helpful information. All it requires is that you read it, understand it, and if you don't, then ask questions. So for this month, we have financials, banks, commodities, DBA. This is like into mid-month, so we start the split mid-month, end of month. But for the most part, these stocks still, this stock and these sectors, excuse me, still have strength. NYSE, Qs, UNG, USO, semiconductors, OIH, XOP, transportations, TLT still remain fairly, they kind of reverse. So the weakness in TLT can possibly revert to mid-month strength. Weak is ITB, which is home builders, XHB, the peripheral home builders, materials. We, at the end of the month, we start to begin weakness in the XLF. The XLF, remember, has some components of big banks. It has, of course, brokerage dealers. It also, like Schwab, it also has the Chicago Mercantile Exchange, so it's not a pure bank ETF that some people feel, and it might be the difference of the conflict between the strong and the weak. There's a cross current between mid-month, end month of reversals. But these are the spiders, the Russell, the diamonds towards end of the month start to peak out. So that could be the sell in May, go away mantra. So I wanted to bring that to your attention of why do we have strong and why do we have weak, and there seems to be an overlap is because some are entering, they're still strong towards the middle of the month, end of the month, and some begin to peak out and are weak mid-month, end of month, okay? That's why I quote, sometimes you get the sell in May mantra, but as I've been quoted as saying, but no one ever said it was the 1st of May. So that's probably some important information for traders to understand. Don't get just ultimately bearish first and foremost in the beginning of the month. On Monday, we have factory orders this morning. Fed speaks. Also, before I get into reports and events, I skipped one important element. During the month of May, we have some commodity seasonal spread trades. And let's talk about these. You sell this is selling new crop and quasi-new crop. September is kind of like the harvest of the South, like not really a lot of harvest comes in Georgia and the southern tiered states and the Carolinas. That's not really a huge new crop, but it is fairly new crop. It's what we call the quasi-new crop. There's still old crop, meaning corn that's been in storage bins from the prior harvest versus the new fresh from the southern tiered states. But this is a bear spread, by the way. It's a bear spread. You get in on selling the Dees corn versus Sep corn on or about May 8th. You liquidate before August 1st. Then you have a different spread. You buy corn, sell wheat on or about the middle of May, the 12th, and liquidate before 6/15. Wheat comes into harvest. Winter wheat is harvested, and there's an awful lot of supply. So you buy the July corn relative to July wheat, and you take advantage of the price differential as wheat will go down. If corn is bearish, wheat will go down more than corn typically. And we'll talk about that spread over the course of the week. Then you also, for natural gas high leverage players, this is also a bear spread because you're selling the or it's a bull spread, excuse me, bull spread. You're buying the, no, it's a bear spread. I was right originally, for gosh sakes. Anytime you buy the back month and sell the front month, you're in a bear spread. If you buy the front month, sell the back month, it is a bull spread. This is another bear spread on nat gas. You're looking for July, which is more liquid, to move down. You're looking for D's to not go down as much. So you're looking for the outperformance of the front month July to go down. You get into that as a bear spread on 514. Interestingly enough, nat gas typically is strong, UNG, early in the month. By mid-month, it starts to peak out. Look at this says, mid-month on 514. So it's kind of like, I just wanted to go over that. Very important about, like I said, mid-month versus end of month. These are the strong time periods. It stays strong. Last month, UNG had a substantial rally last month over 3 days. And so there might be some follow-through upside. It might linger for another 2 weeks or a week and a half and then peak out. So that might be a way to capitalize on a trade in nat gas. For commodity diehard ag traders, you buy August feeder, you sell D's live cattle. That's an intricate spread. There is liquidity issues to that spread because December cattle is not as liquid as the August or the October or even the June. And then the August feeders, you're trading a baby cattle contract. So August feeder, what is feeder cattle? And that's the opening bell. They're babies versus full live expectation. So I like that spread as well. Then again, we have beans, and then that leaves us into this week's. The biggest granddaddy of them all is going to be unemployment report. Don't forget, Janet Yellen speaking on Wednesday. There's tons of Fed head speakers. I don't list their names. I just say there's a Fed speaker. So if you're in a day trade or in a trade, just understand a Federal Reserve member says, I don't like low interest rates. It's going to cause the market to move. Versus you get another Fed speaker that says, I want low interest rates forever. And then all of a sudden, you got a market that moves because you want to pay attention when they are coming out versus which guy's speaking. Some people say it's important. You can find other platforms that'll list the exact speaker. I just did it as a convenience for you to understand. Britain has general elections. Might be fairly important and affect things as a global economy. Those are the big news. Consumer comfort index is not a consumer confidence. The Fed's looking at consumer confidence, and that's going to be kind of important. As far as earnings are concerned, we still have tons of names coming out this week. Zillow, in the energy space, Noble, we have Office Depot, we have Sprint, we have DirecTV. I mean, we just can, and that's just Tuesday. You can go through these lists and see some of Tesla. Everyone will be looking at Tesla, of course. Dense X-ray, Dense, can't remember off the top of my head. That's embarrassing. Oxy, Occidental Petroleum, Triple D comes out. Triple D, Stratus did not have a very good go of it last week. Alibaba, people will be focusing on, again, the social media names because they had really a hard hit. NVIDIA comes out after the market closed, and NVIDIA was one of our stocks that actually generated a weekly, in our scans, a weekly high closed doji, NVDA. So let's take a look at NVDA quickly and say, well, NVIDIA generated a weekly buy signal. It's in a daily high closed doji. But there's earnings, and they may be getting ahead of the earnings, and we may see an upside. The longer-term monthly volume is ranging. The short-term daily looks fairly positive, and the intra-time period weekly also looks fairly positive. But again, earnings are this week. So this generated a buy signal near support for the month. These are my buy signals that are daily buy signals when the weekly's in a buy mode. These were, of course, the daily high closed dojis. And I went through the name to give you a good amount of stocks that have good seasonality, good volume, and I've kind of filtered them out. Notice we have SMH. Now, that's not a stock. That's the ETF on semiconductors, and it formed a daily high closed doji. So we might see more over the next few days. We might see more and more of the semi-stocks start to pop into a buy. Here's what I generated on the weekly high close doji. You had Exxon. You had this little guy, which we knew about, which was Bank America, right? And there is the orange, and something we actually touted about because we like the fact that we've had long-term volume, and you could see we're in a trading range. We're at the bottom of the range. The volume on a weekly basis, if you note here, at the bottom end of the range, the volume on a longer-term basis is not down where it once was. It's accumulated. So it shows that every time this stock has dropped into support, they've accumulated the dickens out of it. That's long-term support, long-term volume value buyers. This is the weekly. And if we take a look at the weekly, we'll note that it's kind of gone down. It's traded down in price, and we haven't budged the needle on the intermediate term volume based on a weekly basis. Many traders still focus in on this volume declining, and I'm focusing in on the average change of the volume. And relative, you have another divergence situation, which I generally like to see, because the small speculator and a lot of traders that are not adjusting themselves to maybe new techniques, or those who haven't adjusted or changed their outlooks or their tools to match the new era of trading styles, are still using volume histogram and not a accumulation of volume technique. So when I see the histogram down and I see the OBV up, I kind of get a little bit more excited about that for a longer term perspective. What's longer term? Since the financials do see upside, I think that Bank America at the very least could go right back up to the last conditional change. The weekly chart here shows $17, and I'm not asking for the market to do a whole lot. I'm only asking for the market to get to the top end of the range of where it was, or back to where it started from at the beginning of the year. If this stock went back to where it started at the beginning of the year, as it's in a kind of seasonal strong period of time, you'll note that if I can take the high of this bar, you'll see that was January, just to give you an idea. This was 12/31, and this we opened the year up at 18. So if Bank America only goes back to where it started from at the beginning of the year, that's 18. I'm only asking for the market to get to 17. So any event, that's we'll follow this, but the daily OBV looked a little promising. So that's what I wanted to go through from top to bottom. What does the weekly analysis look like? What does our charts and so forth and the tea leaves look like from a technical basis? Just to show with you that I was not on the wrong chart. I always like to, give that to you live and in person. So give me 28 seconds or so, and it'll do that for you. And then we'll be concluded with the weekly planning and scanning. Here we go. So look at what we did on a week-to-week basis, man. We went from way oversold, and now the stock market's starting to go up. The spread relationship between the NASDAQ and the ES, it's not looking weak. It's actually breaking out. It's not way overbought. It didn't gap way significantly above my moving averages yet, which tells me the market is not overbought and can move, and possibly could see a extension or a blow-off top type of before it peaks out. This is the chart that shows our cycling event between when a market goes from oversold to overbought, oversold, overbought, and we have multiple weeks left of life if and when that does eventually peak out. That does conclude today's planning and scanning, this week's. Have a great trading week, and for those that are in our trading room, we'll be back with more information in just a minute for trade setups.